everyone, welcome back to a new video. In this video, I'm going to be doing something a little bit different than before. Before I used to make analysis videos, I'll still keep making them. Just the predictions that I've made so far are still in play, they're still happening. So all that's happening, I decided why not make a video about the most used indicators. So today I'll be going over a couple indicators, analyzing them, analyzing the primary strategies that are used with them, and just talking about whether they're worth it, if they work, if they don't work, um, and whether you should actually use them. So we're going to start with an indicator that just about everybody knows if they're in trading, the relative strength index. So currently, I actually have an indicator set already, the no gaps candle indicator. The only reason I have that indicator set is to, as you can see, have no gaps, as usually SPY usually has gaps throughout the day, but now it doesn't. So it's a very useful indicator. But starting with RSI. So RSI is typically used to, well, find when areas are oversold or overbought. So, for example, here we can see with the RSI indicator that it's overbought here, and typically people would take the trade when the purple line here crosses the yellow line, and then they would take the short position. So in this case, it would be somewhere around this candle. As you can see, it did actually work. However, there are many times when such positions don't actually work. For instance, this one right here. As you can see, the RSI shows that it's very overbought. So you would take the short position somewhere around here. So let me mark it. We can see that it's going to be somewhere around this candlestick, probably this one. So let me mark it with a line. And then you would buy it back when it's oversold. So the point where we see it's oversold is actually right here, and we would buy it back and enter a long position right at this point. So let me mark that. And as you can see, you made a loss off of this position. Now, this is not a once in a lifetime event. This actually happens very frequently with RSI. And although it does work on some occasions, the positions are typically quite small. And if they're not small, they're losses. So RSI is a good indicator, especially if you're starting out. You get to learn more about trading. You get to see how trading works and the different indicators that are associated with it. But in more advanced forms of trading, I definitely don't think that RSI should be used. And RSI is going to make your trades much less likely to take profit than if you use price action, for instance. So let me take it out here. And our next indicator is going to be the stochastic indicator. Now, the stochastic indicator is actually very similar to RSI. That's why it's stochastic RSI. But we're going to use specifically stochastic here. So, as you can see, it's in many ways similar to RSI, just much more volatile, fluctuates a lot more. So, as you can see here, it shows that it's overbought. It crosses under, and there's a red point right here, so it tells you you should short. However, as you can see, you would make a pretty bad loss here, especially if you're closing right here. Now, this is even more frequent with stochastic RSI. If with RSI, it's maybe once for every 3 trades, with stochastic, it's 1-to-1. For every position that there's a possible win, there's a position with a possible loss. Now, actually a very big issue that's associated with both of these indicators, even if you're using algorithms. It's entering into the position at the right time and getting a commission or a fee, the broker taking a commission or a fee that is actually beneficial for you. Sometimes the broker takes such a high commission or fee that it's just the case that you actually end up losing, even if you hit TP. Now, the reason this is such a big problem with both of these indicators is that they project small positions a lot of the time. When it's overbought or oversold, moving from overbought or oversold to overbought, the movement is very minute. So a lot of the times it actually happens that even when you're supposed to hit profit, you hit a loss, which means that these indicators work even less often than they're actually supposed to. Now, moving on to the next indicator, we have the Bollinger Bands. So the way Bollinger Bands work is that when it crosses the top band, you take a short. When it crosses the bottom band, you take a long, and so on and so forth. Bollinger Bands, I would actually argue, work better than RSI, just because they move with the market and they're based on moving averages. So, for example, here you can see it crossed above, you take a short when it crosses back below, and then here it crossed below, you take a long when it crosses back above. Now, there are many scenarios where that doesn't actually work. For instance, here it crossed above, then it crossed back below, and you take a short, but then you end up losing because you end up closing your position all the way up here. And that is a loss. And that happens very frequently, actually. So, for instance, let me find another scenario here. This, for example, crosses above, crosses back below, but it would be a short. You would take a short here, but you would make a loss off of it. See, it didn't close below. It just kept going straight up. So Bollinger Bands, in my opinion, are better than RSI and stochastic. However, still, it's very opinionated. It's not actually based on fact too much, and it ends up in losses a lot of the time. I think it's very possible that using Bollinger Bands will result in a profitability of less than 50%, which is frankly not too good. Now moving on to our next indicator, it's going to be the moving averages. And now moving averages are some of the most used indicators in all of trading, even in institutional trading. So we're going to use the MA ribbon here to get a couple moving averages. And typically the most used moving average is the 50 EMA. So we're going to put that here. There we go, 50 EMA. And I see this with a lot of traders. I see it actually in many classes as well. They teach a thing where you use moving averages with a head and shoulders pattern. So if you have a position, for instance, where there's a head and shoulders, you see shoulder, head, and then shoulder, they typically wait for it to come back above and bounce from the EMA before taking a long, for instance, in this position. But this works so rarely that it's actually very terrible. So here, for instance, we see a shoulder, then a head, kind of messed up the head there, and then we see another shoulder, and it kind of, you would actually see it, most of these traders would see it bounce off here, and they would think, oh, perfect position to take a short, I knew it. And they take the short, and they end up losing. And then right afterward, they see another position or a thing that they think is a position, where there's a shoulder, albeit small shoulder, then a head, and then another shoulder, and it actually bounces off, so they think it's going to be a long. However, it ends up being a short. So this is very consistent with a lot of lessons and a lot of trades that these traders teach and try to show people, and it keeps being wrong. It's wrong over and over and over again, yet they keep showing it over and over and over again. And I think that this is just very stupid. A lot of classes, actually, a lot of trading classes that I've seen over the years are based solely on this pattern, and in the current market as well as the past markets. Such a pattern has never worked, and I'll actually explain why at the end of this video. So stick around as we finish off with our last two indicators. First, the MACD, which I do have here. So MACD is used by a lot of people. Actually, I have a couple of friends who use it in options trading, for instance, or trading crypto, forex, and it's not working too well for them, I'll admit. I've actually been trying to get them to switch, but a lot of them are stuck in their ways, which is a very big problem that most traders have. It's not wanting to change. So that's actually why I'm making this video along with exposing so many of these indicators. So onto MACD. Here we see that with a crossover of this line, there should be a short position. However, if you enter the short position, you would make a loss because you would actually end up closing your position right on this candlestick, and that would be a very catastrophic loss. So this happens very often with MACD. People try to change the settings, try to change what other indicators they use it with. However, always I see this all the time. It fails over and over and over again. As I told you a second ago, my friend who uses MACD for options trading, he lost 13K on one trade, all because of MACD, along with many other trades where he lost even more. So, in my opinion, MACD is a very bad indicator, and it's very opinionated, and it doesn't work too often either. So, definitely, I would suggest staying away from MACD. I know a lot of traders, actually, a lot of teachers as well, use the MACD indicator to teach their students and to teach investing. However, I I am very adamant in the thought that the MACD is just a terrible indicator and not worth it. Now, finally, the volume indicator, I would say, is the best indicator out of all of these, as it is based solely on statistics. Now, a lot of people obviously don't actually know how to use the volume indicator, surprisingly, and most people actually use it incorrectly. So I'm going to talk about a couple ways to use it. So the first way that a lot of people use it is when the MA line crosses above the volume candlesticks, you take a short position. So for instance, here it crosses above, you would enter the short position here, and you would carry it forward until it crosses until until a blue candlestick, actually, in this case for you, it might be a green candle for volume crosses back above the EMA, which would be right around here. For other people, it's when there's a divergence, when there's a volume candle that's much higher than all of the others. For instance, in this case, then you would take a short. So this is not anything new, honestly. And especially in the current market, it's very hard to make it work. So, for instance, in this case, you see this volume stick with this candle, so you would take a short right after it and you would make a loss eventually. So, volume indicator is very good, but you have to use it in certain ways, which I'm not going to be reviewing in this video. If you want me to review it, leave a comment down below or message me on X, but I won't be reviewing it in this video. Overall, I think the volume indicator is actually the best indicator out of all of those that are covered today. However, it is still very opinionated, and actually that's a huge problem with all of these indicators that are covered today. That the biggest problem most traders have is that all of their trading, based on the indicators, with the indicators, is opinionated. As I showed with the moving average, with the head and shoulders, it's solely based on your own thinking, solely based on your own opinion. With actually MACD, Bollinger Bands, Stochastic RSI, it can also be based on your opinion, depending on what strategy you use. But all of these indicators typically come with opinion. And a lot of my friends actually who also do investing, who lost a ton of money on certain trades, lost that money because they traded based on their opinions and not on statistics. So that's why I think volume is actually the best indicator out of all of these, because it's solely based on statistics, unless obviously you do a certain thing where you trade based on how high a volume candle is. But I think, as I said in a previous video, the biggest problem that traders have currently, and actually across all of time thus far, is that their trading is very opinionated and fully based on opinion. It's not numbers based, it's not statistics based, it's based only on what they think is gonna happen. So, just a little pointer to take with you from this video. I said it in another video as well, just wanted to reiterate the biggest problem that today's traders have is their opinions. So thank you for watching, hope you enjoyed. If you have any other videos that you want me to make, any assets you want me to analyze, leave a comment down below or message me on X, Citizen1. Other than that, thank you for watching and have a good day.